Budget intelligence that will dominate. Nirmala speaks, we decode in real time. Unrivaled, unmatched. Udayan on your side. Budget 2023 with India's #1 budget team. Only on India Today. The only budget coverage worth your time. Blazing fast, actionable budget analysis. Budget intelligence that will dominate. Nirmala speaks, we decode in real time. Unrivaled, unmatched. Udayan on your side. Budget 2023 with India's #1 budget team.
Hello and welcome to Business Today Television. You're watching our post-budget coverage, a budget that led to a sharp and smart rally in the markets. And joining me here in the studio, budget studio BTTV, is Udayan Mukherjee, the global business editor of India Today Group. Also with me, Saurabh Majumdar, the editor of Business Today. And with us, Deven Choksey, the managing director of KR Choksey, A. Balasubramanian, the MD and CEO of Aditya Birla Sun Life, and the chairman of the Association for Mutual Fund Industry, Dhiraj, Relli, the MD and CEO of HDFC Securities, and Homi Ranina, Advocate, Supreme Court of India. We'll also be joined by Mr. R. Gopalan, former Secretary of Economic Affairs. Udayan, for our viewers who have been watching you through other India Today platforms, including India Today TV, what's your key focus now? Much of the fine print has been analyzed. What's your key take at this point of time?
No, Siddharth, I think given that 1 hour has passed from the budget, I think most people are aware of the salient points by now. But I would say on the face of it, it looks like there has been a significant investment capex boost, and we've seen some kind of a consumption giveaway as well. But once you look at the fine print of the numbers, it appears that the investment capex thrust will not be hugely additional to last year. There will be some, but not a kind of a number which will galvanize the economy or anything like that in the face of the kind of slowdown we are seeing with corporate capex. And even the consumption numbers, it's debatable how many people will shift from the old regime to the new regime, and to that extent the consumption boost may not be that meaningful. There is a relief from capital gains tax not having been increased, and that's primarily the reason why the stock market rallied to begin with. But I would also say that given that it is a year of global turmoil, the fact that the projections are reasonably credible, that the finance minister is talking about 10% nominal growth and has pretty much budgeted in 10% growth in gross tax collections for next year, I think it's not an unreasonable assessment to go by. So therefore, I would say the estimates are quite credible, which is why the bond market too has been quite well behaved, and we've seen a small rally in bond prices as well. So looking at the bond and the stock reactions, I think most people seem to believe that this is a no harm done kind of a budget. Incrementally it might be positive, but all eyes will shift very quickly to the FOMC meeting, because that, given the nature of this budget, I think most people will believe that the FOMC assumes far more importance than the union budget.
Absolutely. And Saurabh, before we go across to our guests, a quick take from you, the broader macro economic impulse that you see visible through the fine print.
I think, Siddharth, the best news for me is the finance minister talking about fiscal consolidation and very clearly making it clear that she wants to stick to the fiscal roadmap which she's laid down. 5.9% for the coming year and 6.4% for the current year. I think and overall talking about keeping it below 4.5 in FY26. I think this is good news, and I think that is also something which would have sort of helped RBI also and help them breathe a sigh of relief.
Okay. Mr. Bala, I'm coming to you for your first quick take, and then we'll head across to Mr. Deven Choksey. Bala, what's the key takeaway for you?
It's a credible budget. There is no any kind of details that you have to look for on the overall math. And second is the allocation towards infra and making the entire Bharat more in the form of focusing on green energy and green initiatives. Second, the rural economy, agriculture economy, and lifting actually the income in the hands of people. All is actually very, very positive. Secondly, there is also surprise elements on the positive side, which is the peak rate of interest, peak tax rate for individuals have been brought down from 40 to 39%. The entire market was not expecting. Secondly, the market was expecting something on the long-term capital tax, some changes will happen. Nothing of that can they have done. Therefore, I would say it's the most credible budget focusing on driving the growth, including driving the consumption, which is the most need of the hour.
Siddharth, if I could get Mr. Ranina in on this, because he's a very renowned tax expert and he'll be able to tell us how much of that shift may happen from the old regime to the new regime. Homi, good to see you. You must have done the math by now. Can you tell us how many people actually will shift from, particularly in the 7 to 15 lakh rupee income bracket, will shift or find it profitable to shift from the old regime to the new regime?
I think those who have gone in for insurance cover and got the LIC premium deduction on the ATC, or those who have put in money in public provident fund, which as you know is valid for 15 years, they will not shift because they will continue to have to make that payment. And if they want to get a deduction, then in that case, they would certainly benefit if they continue with the old regime. As you know, under the old regime, if you have put in 1.5 lakhs on the ATC and under ATD, and under others, then you may get a tax exemption, or even if your income is right up to 7.5 lakhs. Therefore, they may not be inclined to shift to the new regime.
So,
but younger people who don't want to lock in the money in the public provident fund or in LIC premium will want to shift to the new regime.
So, what is your qualified opinion on what percentage? I know there cannot be an exact number, but what is the rough percentage of people you see responding to these giveaways in this budget and moving to the new tax regime, if I were to push you for it?
I would not expect more than 15%, 15% is the maximum which will move currently. And as I said, the new taxpayers may want to go straight into the new regime and not avail of the old regime at all. Therefore, I think as far as the current taxpayers are concerned, not more than 15% will shift.
Well, that's a brilliant point, really, Mr. Ranina, because this was what we were discussing earlier. It's clear that young people who are perhaps less inclined to save, Udayan, and you would agree with me, there's a different sort of Gen Z kind of approach towards savings and spending, versus all those who are already locked in home loans, and look at what at middle income and higher income housing. But Deven Choksey, I know you have to go, therefore I'm bringing you back. The point that Udayan asked, and just for our viewers to understand, the budget is done and dusted. There was a rally, some of the profits may have been booked. How significant is the FOMC call that will be taken very shortly?
Well, I think if they are going to further increase the rate of interest, then certainly I think we are asking for shift of money again happening. But I think as we understand from the last meeting of the FOMC, we believe that I think they have got, I think, a reasonable grip on the subject now. No more, I think, enhanced threat of, I think, recession. I think whatever currently being seen, I think, is happening. But beyond that, I don't think that FOMC rather is going to create any kind of a further pressure for increasing the rate. I think most of the rate hike probably may have factored in. Maybe a small percentage may be left out, I think, at this point of time.
Mr. Choksey, I just want to draw your attention to a news report that has come out. This is Reuters, and Udayan sort of, and for all our viewers, According to Reuters, and this news has been published a little while ago, Credit Suisse has stopped accepting bonds of Adani Group as collateral for margin loans to its private banking clients. This, of course, Reuters says is a sign that the scrutiny of Gautam Adani's finances is growing after the allegations of fraud by short seller. The Swiss lenders private banking arm has assigned a zero lending value for notes sold by Adani Ports and Special Economic Zone, Adani Green Energy and Adani Electricity Mumbai Limited. The story has also been sourced by Reuters to Bloomberg News. I just wanted to make that over to you, Udayan, on this point.
This is very damaging potentially for Adani, particularly because the empire rests very heavily on overseas debt. Adani's empire has not been fueled that much by debt from the Indian banking system. And if an institution as influential as Credit Suisse marks its collateral down to zero, I think it would have very serious repercussions on raising capital for the Adani Group in the overseas market. Because these things tend to follow in a herd. Once Credit Suisse does it, many other lending institutions will follow it up, and they tend to move in a herd like rating agencies. So I think this is potentially very damaging news, and the capital raised by Adani in the public issue, £2.5 billion, is actually peanuts compared to the amount of money they need to raise over the next couple of years. So I wouldn't be surprised to see the Adani Group stocks under further pressure if you can bring them up.
Perhaps this could be the reason the markets cracked, and like Udayan said, right there on the screen for you, the Adani Group stocks. Deven, a quick comment on this particular news, if you would want to offer that.
Well, I think certainly it's not a happy news for sure, and I think definitely it is going to have a challenge going forward. So let's wait and see what the outcome is coming out to be. But as of now, I think it appears to be, I think, a little bit more challenging than earlier thought about.
Okay. Bala, I'm coming back to you, and let's move beyond the budget, beyond the FOMC. There is, of course, tax change, and we went into this discussion about saving and investing for the younger. What's the longer term horizon, and if you were asked to advise, not stock specific, but broadly, in terms of what should investors be looking at and the average Joe in the markets till at least the next 2 or 3 months?
I think next 2-3 months, I think clearly the equity market will be driven by the valuations, and also the central bankers move in terms of rising the rates further. Though there is a feeling the rate hike cycles will get peaked, including the Fed that's going to announce today, including RBI, which will announce maybe next week. But clearly, I think the growth momentum that generally being seen in the global market, there is enough perception is building up that mild recession will begin. So therefore, from the market point of view, I think equity market, though it has run up today on the basis of the good budget, absolutely no doubt, the longer term outlook is anyway getting better with this budget. Clearly, in the short term, I think it will be driven by the valuations and then earnings yield versus the bond yields. Therefore, if you have one look at for next 2-3 months, clearly the bond yields, which of course at an elevated level, given the fact we have seen a continuous rate cycle, increase in rate cycle that we have seen, therefore the bond market will be elevated. Therefore, the risk reward is more, of course, in favor of the fixed income schemes and the fixed income instruments as well. Also remember in mind, I think there are two things which has come in the budget. One, those who have been, of course, going and putting money in the large pool of money, especially in the HNIs, in the insurance category, they are now bringing some of new taxations. Therefore, that money will actually get shifted to mutual fund fixed income schemes. And second, a lot of these HNIs have been going and investing in MLD, there's market-linked debentures, taking advantage of the tax benefit that used to offer a fixed income instruments, also have been removed. Therefore, that money also will actually move to the fixed income schemes. Therefore, the issuance of incremental MLDs will get reduced, will become zero. And therefore, that money also move to the mutual fund schemes.
Okay. Homi, just coming back to the tax issue, you said between 7 to 15 lakhs, you expect only 15% of people to move to the new regime. What about people up to the 7 lakh category? Because that's a very large category of taxpayers as well. Potentially, what could be the relief for them?
Very, very, very marginal, very little. So I don't think that they would like to shift to the new regime just to get the small tax advantage. Because if you look at the difference is very small. And therefore, the people will continue to earn, because say if you have money in public provident fund, you have tax-free interest on public provident fund. Now, you don't like to forgo that. So that is a very important point. Yeah.
That, great point, and we'll come back to that, Mr. Ranina. Please do stay with us because Dhiraj Relli, MD and CEO of HDFC Securities, has been awaiting by for quite some time. Dhiraj, thanks for being there, and Mr. Gopalan as well. And apologies, gentlemen. Sometimes news overtakes the planned conversation, so I'm going to request all of you to bear with us today. Dhiraj, the question to you. Sum it up for us and try and look ahead for the markets, because everyone who's watching you would want some amount of guidance here. Today was a good day, but who knows what tomorrow will have on the markets.
Hi, so good afternoon. I think the budget was quite pragmatic, progressive and prudent. So why I say so? Because market approached this budget with quite a fear that there'll be a tinkering with the capital gains. That was a big fear among the market constituents. That hasn't transpired, so it's a good news. There's something for everyone, whether it's bottom of the pyramid, low income group investors, or it's for ultra HNIs as well. Reducing the interest rate from tax rate from 42.74 to 39% is a good positive move for the ultra HNI investors. So I think there is something for everyone, and this budget was quite comprehensive. It was in fact music to my ears to listen to the finance minister. It was like she was painting India growth story on a canvas, and this was the first budget in the Amrit Kal. To that extent, it is quite progressive, and I believe that she has done justice to various sectors and quite comprehensively covered what is in store for infra sector, what is in store for financials, what is in store for even automobile sector, because there was a mention about vehicle scrappage policy, and then to that extent, the listed universe was comprehensively covered, and it wasn't that negative for even ITC as well.
Right. Saurav has a question for Mr. Gopalan, but Saurav, Udayan, and for all our guests, just a bit of data that Karishma Asudani has pulled out. The budget mentions two different disinvestment numbers under two different heads. Disinvestment of equity in public sector enterprises is pegged at 61,000 and disinvestment receipts at 51,000 crore. And in the run up to this, Udayan and Saurav, what's happened is that the government, if you recall, Saurav, and we have reported on this on bt.in, businesstoday.in, do visit that, is the fact that dividend receipts are also being counted as disinvestment. This, of course, viewers, will be clarified in the press conference, I imagine, which is being held by the finance minister at 4 p.m. But Saurav, you wanted to bring in Mr. Gopalan.
Yes, in fact, this exactly was the question I wanted to put to Mr. Gopalan. How do you see the disinvestment target, Mr. Gopalan, 61,000 crore, given the fact that the last year's target was just a target and hardly anything, I mean, it was just a half amount which was raised. Also, how do you see this 10 lakh crore, capex, which has been laid out?
Okay, two things. On disinvestment receipts, if you go into the capital receipts, on non-debt receipts, you will find 61,000 crores. Okay, and if you go into the receipt side, non-tax revenue, dividend profit, that's a 91,000 crores. Don't confuse dividend and profits with the other receipts, which is the disinvestment receipts. So there is no difficulty on understanding that. Okay. Second, on the 10 lakh crores you have been talking of about the infrastructure, I think it's a very good move. I wish they had increased it further, but problem is ability to implement. There, one suggestion I would like to make is that government spends money on its own a number of things. Why not on government implemented infrastructure? Why not they involve private sector in implementation? Give some portion of government's expenditure, which they do in their own departments, to private sector, so that the capacity of the government to execute programs at a much higher budgetary level is ensured. That is something which government has to look at, and that calls for a drastic revision in the way government does its expenditure.
On that subject, Mr. Gopalan, let me ask you, because included in this 10 lakh crore figure, you have these odd numbers like 50,000 crores plus for BSNL, many thousands of crores for oil marketing companies. That's really not the kind of capex we want to see to stimulate the economy, is it?
No, on the BSNL, bulk of the money will go for, buying of equipments, especially the 4G,
5G.
5G kind of equipments, that will go into that. That will be, and for oil marketing companies also, it will be for investment in oil wells and those kind of things. I think that is something which is clearly worked out. I don't see much of a problem there. Maybe a few thousand crores here and there will be there, but that will be for staff, for those kind of things. And in government, in plan and non-plan, even some of the staff salaries are accounted for in plan because they're expected to work on new projects. So, I mean, that is something you can give up.
Okay, Rajesh Gandhi, who is the partner for Deloitte India, is here with us, and Udayan, Saurav, we have an interesting tidbit that's come out. Currently, the TCS rates, tax collected at source, for overseas tour packages, and anybody who is planning to travel despite choked airports, please do pay attention, 5% without any threshold limit. And now it has been raised to 20% without any threshold limit, and any other case, but that does not include education, that stays out of this ambit. 5% up of amounts in excess of 7, which is the present formula, that's gone up to 20%. Rajesh, as we bring in you into the debate, any other surprises in the finance bill, the fine print that you have noticed that you might want to share with our audience?
Right, absolutely, and thank you for calling me. I think there are a few things in the fine print. First of all, I mean, you have already spoken about individual tax rates. First of all, from a company point of view, in terms of tax rates, capital gains, etc., there are no changes. So I think that is very much welcome. And a lot of the market participants were expecting that there might be some disappointment there, but I think there's been no tinkering in the tax rates for either companies or from a capital gains point of view, etc. Of course, there have been a few places where certain loopholes, if I may say, have been plugged. One is on market-linked debentures, and this has become a very popular project, a very popular avenue for investment, especially for high net worth individuals, because today most of the MLD offerers or issuers, they structure the debentures in a way which gives you a 10% tax rate, resulting in a very high post-tax income. So the government has plugged that loophole, if I can say, by saying that any income on redemption of market-linked debentures will be now taxed as short-term capital gains, which means that it will be taxed at the slab rate applicable to the investor. So if it's an individual, it will be 30% plus surcharge. And as we know, this year the effective tax rate will now be 39%. And if it's a foreign company or a foreign investor, then the income will be taxed at 40% plus surcharge. So pretty much high as compared to the present rate of 10%, which I think will reduce the attractiveness of market-linked debentures to some extent.
Do you have any sense, Rajesh, of what the total corpus under MLDs were, and what kind of money can move into alternative avenues now that the tax arbitrage has been plugged?
Yeah, I don't have a sense of the amount, but I think over the last few years, they were becoming very popular as an alternate mode of investment in debt securities, because post-tax, the returns they were offering were, in many cases, were about 10%. Now, as you rightly said, some investors might want to look at certain other alternatives, whether it is AIFs or REITs, InvITs, etc. So, but I don't have a sense of the amounts.
Okay, Dhiraj, Relli, if you have a couple of minutes, one final question, really, to you, and I'm trying to take this conversation beyond and seeking your outlook on what will drive investment decisions for the average retail participant in the market. There was a bit of nervousness over the last 7 days, and we don't know how it will pan out in the near future.
I think as the event is behind us and the attention would shift to the performance of the companies, we have already the last quarter results are almost over. So after that, I think people will get back to analyzing these earnings, and the focus will go to the bottom-up stock picking only, rather than focusing more on the macro event. And even today evening, we will get to know about the interest rate hike by FOMC also, and some commentary will give us will shed the light on the trajectory way forward also. So I think the focus would shift on bottom-up stock picking.
I think the market's already in the red, the
Yep.
Nifty is down 60 points. I think that's a very, very sharp pull down from a 200-point plus rally down 60 points. I think the intraday swing has been nearly more like 4% for the index, which is very, very substantial. And it's a little scary the way the market has come off. I think the Adani news probably is the one which has led to the undoing after the initial euphoria over the capital gains tax. Dhiraj, how much of a sentiment negative is this? Because yesterday one had that feeling that the issue is behind us and the markets is sort of calming down after the initial storm. But today, most of these stocks are down 10% again, and the Nifty's come back into the red on after what seemed like a fairly reasonable budget. Do you see the Adani episode actually holding the market back or putting pressure on it in the days to come?
Yes, absolutely, because the Adani saga is not yet over. It's just the FPO got subscribed with the intervention of some large investors only. We have seen that hardly there was any retail participation in the same, and now with this negative news coming in from Credit Suisse not accepting their bonds as Adani bond as collateral, I think this is a big dent on the sentiments in the market in India, and also I think it's got to do with the continual pressure of FIs selling also. I think European markets have also opened negatively, and we are still approaching the event of FOMC, and though there is a consensus that there will be a 25 basis point increase, but the commentary is something everyone is looking at. So, the initial euphoria of not having any negative news in the market is over, and now markets are reading more, market participants are going and reading more fine prints to understand the budget even better.
Thank you very much, Dhiraj, for your time today. Busy day, last hour of trade. Udayan, I wonder if you have a question for Bala, because he's also about to leave.
Bala, what about the debt investors? Because there was the whole talk about capital gains tax on equities was based on the premise that people need, or the finance ministry wants to rationalize between equity and debt investors. Would debt investors feel a little miffed that they're still stuck at 3 years while equity investors continue to enjoy 1 year for long-term capital gains?
Yeah, I think the expectation was a little different from market point of view, in the sense that while there was a resolution on the capital gain tax between 1, 2, 3 years between equity, real estate and fixed income, there's another expectation which was there that the indexation benefit that fixed income schemes used to enjoy, that may go away because the bank lobby actually has been pushing for FD to be given the same benefit, or this is being taken away. I think I would say the budget has been more positive for the fixed income schemes for one simple reason, that the premium paid for HNIs for schemes which are guaranteed schemes, the insurance policies now will be subject to tax at the time of maturity. So for all the money that was moving actually the guaranteed product in insurance, would certainly actually will find it more meaningful to come into the fixed income schemes or mutual fund. Thereby I see is one positive. Secondly, earlier you mentioned about MLD debentures. I also mentioned about that. I think the size is roughly about 7,000-8,000 crores, where most of the people actually are going and parking themselves in the MLDs because the tax benefits are much, is what is equivalent to our equity. Now that is being taken away. That money also will move to the fixed income. Therefore, fixed income actually has got some kind of flip in the budget, I would say, by not introducing indexation benefit being moved out, and no change in the taxation.
Thanks very much for that perspective, Bala. Udayan, I just want to read out, because this was a point that you took. Deepak Shinoy, a market commentator, has put out on the subject of MLDs. Insurance policies, even non-ULIP, where premium is above 5 lakh per annum, will see full tax on income above premium paid. Not as capital gain, but as income at the marginal rate of tax. Only if you die does the money not get taxed. Policy is issued after 1st April 2023 only, and this was the second part. The first one was the MLD industry is now dead.
Correct.
All MLDs are classified as debt, and any income, regardless of redemption, maturity or sale, will be short-term gain only. That is added to income, taxed at marginal rates. Sort of, once again, the adage, the devil lies in the fine print. The document to see post-budget is always the finance bill. I wonder, Mr. Gopalan, why do this? What do these small steps, for example, 20% threshold increase on overseas tours, what does all of this come together for you, and the insistence that any tax relief that is to come will only come in the new tax regime? And we have already had noted experts raise some questions about how successful it might be. First time around, it was a complete dead duck in the water.
I think any new regime being applicable retrospectively, not prospectively, is something which I think is a bad principle. I think if there is something which is applicable to everything, it is applicable even to all the existing investors. Why should we discriminate the existing investors? That's not a correct thing to do. And these small little things which you have been asking, which you have been mentioning about this 20% or, well, I don't know, government may be trying to feel that they are plugging some loopholes. These are all plugging loopholes kind of a thing. But they can do without that. In a big budget of about 45 lakh crores, these are all small amounts.
Right.
Why are they looking at it? I think they can avoid these kind of small activities.
Well, that was the whole point of direct taxes code and long-term stability. On the screen with us, Shanti Ekambaram, the whole-time director at Kotak Mahindra Bank. Saurav, Udayan, I'm opening up to you. Saurav, you could start with a question to Shanti.
Yeah, hi Shanti, welcome to the show. Just wanted to get a sense from you on where do you think the entire, markets were really euphoric just at the time the budget speech was going on and just immediately after. Now they've come off. What's your sense of where the markets are headed now? Because the markets have clearly come off in a big way and in enormous volatility during the day. So where do you see that and what are the reasons you think?
So the way I read the situation, Saurav, is that there were no major negative surprises. There were 2-3 key pegs that the market was looking for. What would be the fiscal deficit and the glide path to the fiscal deficit? Market was expecting around 5.9 and it came at 5.9. Second, what would be the amount of the government borrowing? The expectation was 15.5 lakh crores and it was announced at 15.43 lakh crores. Third, they said since private sector capital expenditure is not happening, the government needs to provide for the capital expenditure. The outlay for capital expenditure, particularly on infrastructure, has been significantly higher. Fourth, worry about any changes in capital gains tax, no change in capital gains tax. So that was a relief for the markets. And lastly, some amount of consumption boost by doing, a tweak here and there on the personal income tax. I think at the highest end, the surcharge coming down from 37 to 25 and thus absolute tax 42.3 to 39 is good. I would have wished for more. But the way I see it is market saw all of this as positive and saw nothing substantively negative in the headlines of the budget. Okay, I'm repeating, nothing substantively negative in the headlines of the budget. So from a sheer budget response, you saw the market give a thumbs up and you saw the sheer increase. Two things. One, what this means is growth will continue to be an agenda and the glide to fiscal deficit will go down thanks to the buoyancy. And in my mind, the 5.8, 5.9 fiscal deficit was acceptable. I think once it sunk in and the party was over, you come back to reality. You come back to the reality of, geopolitical tensions. You come back to the reality of what will Fed do tonight, what will RBI do on the 8th. Right. You saw that the markets were weak and you saw a huge amount of selling by FPS before we went into the budget. So I think it's just coming back to reality and now taking fresh stock.
I just wanted to bring in Mr. Ranina because he has to go, and Udayan, maybe you want to take this, but I want to bring up the specific amounts of the benefits in the new tax regime. That was a graphic that was playing out on the screen just right now. If I could request my producers to bring that back up, and before we thank Mr. Ranina who's been waiting by. Mr. Ranina, I don't know if you can see this, but Udayan, I'll just sort of take it. The new tax regime earlier and the benefit up to 7 lakh, a benefit of 33,800 rupees, 8 lakhs currently the benefit is 35,000, it goes down to 11,600. And if you keep seeing this number, now, Mr. Ranina, I mean, I don't know if you've been able to do those numbers offhand, but would you like to comment on this further? Any more clarity that you can offer to the point that Udayan asked, the chances of this scheme taking off and becoming mainstream?
No, as I said, this will not take off for the existing taxpayers, because there's also a provision which says that once you opt for a new scheme, you have to stick to it for at least 2 years or 3 years. You can't change back to the old scheme. So people will be extremely wary in changing over to the new scheme. And as I said, and I repeat again, it's only the new taxpayers, the young taxpayers, who are not interested in making long-term savings in public provident fund or elsewhere. They will go in for the new scheme. Otherwise, I don't think the new scheme is going to work. It will take another 10 years before, I would say, 50% of the people move over to the new scheme.
What about the wealthy, Homi? Do you see that it being, I mean, the surcharge reduction from 37.5 to 25%, do you see that as unambiguously positive for them?
Yes, they will have more purchasing power in their hands. That is the whole idea. But I think the image which the finance minister wanted to project was, we don't want to show that we are being taxed at the high rate of 42.4% currently, bring it down to below 40. So I think this is more of a perception issue that she has brought it down to 39%, so that we are comparable with other countries of the world as far as the highest rate of taxation is concerned.
Mr. Ranina, just before you go, I wanted to ask you a broader question. Given the fact that the Prime Minister had said at the beginning of before the budget was tabled, that this is a budget the world is going to watch, what do you think foreign investors and the world at large would be the message that they would be taking away from this budget, given the fact that we are into election year next year?
I think there are two messages which I will go through. One is that we believe in fiscal consolidation. The finance minister will be congratulated for keeping the fiscal deficit in check and bringing it down next year further, and going towards a lower fiscal deficit in the next 2 years. So that is a very positive step which the foreign investors will look at, the fiscal consolidation. And the second is the huge capital expenditure and infrastructure development. These are exceptional opportunities for foreign investors. When you go in for roads, airports, seaports, whatever, foreign investors will come in the big way. And this huge capital expenditure of 10 lakh crores is a very, very positive step. And I think that is where the world will look at India.
Shanti, I just want to ask you about this U-turn in the market. I mean, the FOMC is one thing, but one can't help feeling that it's really the collapse again in the Adani stocks which is denting sentiment, because the FOMC is yet to happen. Some apprehension is likely, but this has already happened, the Credit Suisse episode which you must have heard of. How difficult does it make it for the Indian markets and foreign investors looking at India, and what kind of knock-on effects can it have?
So the way I see it is people will digest. You know, the budget headlines, like I said, very positive, both growth and consumption oriented. People will now start looking into the small details, and you will always know that the devil is in the details. I think the increase in the market was just a salute to the budget. Like I said, they've come down to reality. I think they will go by fundamentals. Two things are clear. From the medium term, India is still looking good. A, because there is a glide path to fiscal consolidation, and B, the government is indeed committed to growth. If you just look at the outlay of capital expenditure, they intend to give growth a boost. And if you look at India inflation versus the rest of the world, we still seem relatively okay, although core is sticky. My mind, people will go back and do their maths. Like I said, the market was sold even before the budgets. So nothing new, and the market was jittery. So they were just looking for various causes. The market upturn was a salute to the budget. Now people will look at the details, get back down, and it will again get back into macro versus micro, which is the bottom up. And they'll wait for the Fed. In my view, Fed 25 basis points is a given. That's my view, because if you look at the data that came from the US in the last 2 days, I think they will continue on their path of interest rate hike, but probably 25 basis points. But the narrative is important, and perhaps RBI will follow next week. So I think I would not make too much out of the and the down. I would now get back into the detailing and look at how the execution happens and see.
Shanti, given the fact that the fiscal deficit, like you said, is broadly under control on expected lines, and the fact that inflation also domestically is somewhat under control, do you think RBI would be breathing a sigh of relief after this budget?
So I think RBI would be happy that that fiscal deficit targeted is lower at 5.9 compared to last year, and a glide path of up to 25-26 is given for getting below 4.5. But I think RBI has its task cut out because the core inflation is still sticky. Yeah. If, let's say, fiscal deficit was not lower or it were equal, then they would have a little more of a worry. But I think this is something that will comfort them that there is a glide path, and they would go about looking at other factors that they need to do to make sure that inflation targeting is under control. What will make RBI feel better is that the government is committed to growth, the policies and the outlays committed to growth, because RBI had also said growth and inflation while they will do inflation targeting in the short term.
Budget is forgotten, Siddharth. You just look at the screen. I think the market has absolutely forgotten about the budget. It's come and gone. The best you can say is hygiene is in place now. Hygiene.
The shortest budget speech, Udayan, and the shortest sort of
memory of it also.
Yeah.
I think the Adani issue has taken over completely. It's partly maybe a little bit of anticipation because of the Fed, but we can get the European markets on the screen and see how much they have fallen, because they would be apprehensive too.
Yes.
But you look at the Nifty is down 200 points. Yes. This is no joke. It was up 300 points, it's down 200 points. It's a 500-point Nifty swing intraday, which is not a trifle at all. So I don't think the budget has anything to do with what's going on the screen right now. It's purely 80% Adani and 20% FOMC. The budget has been forgotten.
That's a nice way to put it. Mr. Gopalan, very quickly, we'll keep our focus on the markets. But this one question, in terms of expenditure allocations, if you had some time to go through the granularity, what are the key things that stand out? I saw, for instance, that social sector spending, if you look at it, the core of the core schemes, everything seems to be in the same trend line, barring a couple of items. How would you describe for the average viewer the expenditure priorities that the government is going to pursue in pre-election year?
Government seems to believe that, kickstarting the economy through infrastructure spending, because the multiplier effect is much larger on that, seems to be working in their minds, and therefore more on roads, railways and power. That seems to be the way the government looks at growth. Does the government look at, consumption increase at the lower middle class? No. But there is one plus there, which is the income tax rates. But not many people at that level pay income tax. They are exempted. So how to increase consumption for those people? That I don't think I see much in this.
Okay.
So that's why I look at it as on the expenditure side. But there are other I'd like to mention, but if you have time, I can.
Okay. Let's at this stage welcome in Sanjeev Kishan, Chairman of PwC India. Sanjeev, before I come to you, Udayan, once again, the question that I have for you, and a lot of people send in questions when we used to do Ask Udayan. And like we said, it's about broader understanding of the markets, Udayan, really, because you have seen this drove of retail investors, first-timers coming in, anybody with a smartphone, and with all the technology-driven ability to trade. What is the cautionary sort of view, or your view, that you would give to such people in a time when they have seen iceberg in the form of Hindenburg hit our markets?
Well, Siddharth, I would say that this was a long time coming. The market was quite expensive, and various bad things happened over the last 1 year, but the market was rock steady. It was remarkable for its lack of volatility and its outperformance compared to other global markets. So an episode like this has pricked the bubble a little bit. India remains a very good long-term story, there's no doubt about that. But in the near term, I think we've got to digest some of these. The technical shape of the market is not good. I think the way it has come down over the last few days, you'll remember that the high that the Nifty hit a few weeks ago was 19,000. We're already at 17,400. I think this is creating a kind of a situation where people will wonder if you're heading back to retest the lows that we saw in June last year of around 15,000 on the Nifty. We're still far away from there, but the question is already on the minds of investors. I don't think there's any panic required. And for a lot of investors who are constantly coming into the market, I think that may even present an opportunity over the next 3 months to buy stocks finally at slightly more reasonable rates.
Just for the contrarian would it be like catching falling knives, at least for those who are new entrants?
Well, in the market, you either catch a knife or you catch the bottom, and you can't catch both, and sometimes you can catch neither. So none of us can wait to know what the bottom is and buy at a lower rate. But all that I'm saying is most stocks are down 20% from their peak. The index is not, but most stocks are down 20% from their peak. So at some point you say, if it gets worse, you start nibbling, and then if the market falls more, you get more aggressive in buying. I mean, that's the way people buy or professional investors buy. None of us know when this will turn around. But the mayhem has just started. This Adani episode is just 4 or 5 days old or 10 days old. So I think there is more trouble ahead for the market, particularly so if the Fed does not help us out late this evening. I think the markets can fall more easily.
Udayan, Shanti has to leave, and if there's one question, she has time for one question. So
I did ask Shanti about Adani, but she ducked it quite completely and steered it all towards FOMC and everything else. But Shanti is an experienced investment banker, and I think she would have a very good sense of what kind of knock-on effects might happen from the Adani episode. Because as we were discussing the other day, the banks are feeling the heat. It's not just Adani. Adani is just a small group of stocks, but SBI and ICICI Bank are falling very much because there is a fear, what is the relief that the NPA cycle is over? But if something like an Adani turns into an NPA, and that's quite a bit of money we are talking about, then once again that assets quality question comes back into play. So Shanti, if you don't want to answer directly about Adani, perhaps you could talk about some of these episodes and what it could mean for the financial system at large.
So if you go back to the banking system today, if you compare it to 2 years ago, it's far ahead in terms of capitalization, in terms of the way credit has performed, and it is extremely stable. I don't think things are at a stage where, say the exposure is at a point where it's going to go into an NPA. Very little is known. So I think it's more market reacting without knowing real details. Okay. So in my view, this will probably correct itself. In my mind, I think banking system is resilient. I think they have all followed prudential norms, and I don't think there is an immediate risk to the system from a credit perspective, but one doesn't know which way it is going. So I have no view on which way it is going. All I can tell you is that the banking sector is resilient. All the banks you mentioned have high capitalization, have the resilience and can withstand, but I don't think any event is happening in the short term.
All right. Thank you very much, Shanti, for sparing time with us. Sanjeev is here, and I'm going to...
Look at the stock on the screen. It takes a lot to drop SBI 10% in a single day. The State Bank of India stock, the country's largest bank, is down 9.5%, and that's telling you a story. So Shanti is right in what she's saying, but the market price is telling you another story. It's not an Adani Group company, it's SBI, which is down 10%.
And that just underlines the point that you made earlier, Udayan and Saurav. What he's basically saying, and this is for a lot of the young investors who tune in to watch us, this is an opportunity for boys to grow up into men. Sanjeev, in all of this, read on the screen, and like Udayan pointed out, State Bank of India, but I'm not asking you for a market comment. Your key takeaway from the budget?
Thanks. Thank you so much for having me. I think from a budget standpoint, I don't think we could have expected anything more. Siddharth, we discussed this finding of the first CEO survey last month. And at that point in time also, we had 57% of the Indian CEOs saying that they were quite sanguine about the India opportunity, though they were not so sure about the world. I think this budget actually I hope that will make that 57 number go to 75, if not more, because I think it has a bit for everybody. I think obviously in the run-up to the election process of 24, there's a bit in it for everybody, and I think but the good thing is that it sort of makes sure that there is a huge amount of continued focus on capital expenditure. 10 lakh crore is a very good sum. I mean, it's almost a 30% increase. And then there are multiple other things which are really important, because when we talk about supply chain, because we're talking about transitions which are happening, and there's enough in it for the greening of the economy. There is enough in it to make sure that the supply chains but many of which are actually dependent on the MSME sector are also enabled because of the credit guarantee schemes and so on and so forth. And the enablement, which I thought was very good on the what I would call the rural vocational, employment, which is there. I think there is a lot in it there for them as well. I think if you look at the whole schema, I'm pretty satisfied with the way this budget has panned out. There was a lot of chatter about it. I think from a business standpoint, we couldn't have expected a lot more.
Siddharth, talking of Ask Udayan, I want to ask Udayan one question about job creation. Given the fact that it is one of the about vision statements of the government as we go into Amrit Kal, the Amrit Kal agenda, how much do you think this government has actually been able to do in this budget in terms of actually going ahead with its job creation agenda?
Oh, Siddharth, there's a little bit on the MSME side, which I think they have done. There is also some focus on the green hydrogen bit, 19,700 crores. I think all of these initiatives, when they take off, you will see some kind of employment there. But the low-level, lower-end manufacturing, which is what soaks in the highest amount of employment, which is what Bangladesh and Vietnam are doing successfully, that is still not there. And therefore, our unemployment numbers actually hide more than they reveal. So till you can crack that, I think we'll always have this lower end, higher end problem where the top end of the economy will just keep flying away and the gap gets larger, and this becomes a very, very toxic situation going forward. So some steps are being taken, but I don't think it's enough by a long shot. So I remain very, very concerned on the employment part, which you rightly pointed out. By the way, Siddharth, Adani Enterprises is down 25%. Yes. 1/4 of its market cap has been wiped out today.
Please continue with that. Just a quick interjection here. We'll shortly welcome our viewers of India Today onto this special Business Today TV broadcast on the markets, where hopefully what's happening in the markets, and it affects a lot of people, the retail participation, Udayan. So India Today TV viewers, we welcome you as you join in. Udayan, please continue with that point about Adani Enterprises, and we'll keep the focus. I'll request my producers to keep those stocks on the air. Udayan.
No, because I'm very, very concerned about the way the stocks have followed on today. Even when the day the news broke, we did not see this kind of a rout in the stock. But to see them locked down in circuit 1 day or 2 days after the public issue going through is a real worry, because I think the market is now saying that the Credit Suisse news may actually lead into a complete freeze of Adani assets overseas in terms of being able to be liquid and to raise capital. So, this kind of a fall in the stocks is actually unexpected, because you could have understood a 5-7% drop in the stock prices, but I think most of them, with the exception of an Adani Green, are almost circuit down at this point in time. So it would have been very good to have a view from the State Bank of India today and how they are reading the situation, because I think the largest exposure from the banking system is SBI. And this raises the question once again that whenever there is trouble brewing with any kind of asset, you will find that HDFC Bank, Kotak and ICICI Bank have not lent to those groups, but it's inevitably a public sector bank which has lent to some of these groups. I'm not saying Adani has become an NPA by a long shot, but why have private sector banks not exposed nearly anything close to what the State Bank of India and other public sector banks? Is their due diligence different? So their stocks are not down today, but SBI is down 10%. So the same fears come back. That
Udayan, and Saurabh, please do join in on this point. In the past, when we have asked our bankers and even policy makers about the public sector exposure, one of the answers that stays with me is who will support growth in India, who will support companies who are taking aggressive bets, and we have to have homegrown champions, Udayan.
No, the way the banking model is, Siddharth, you risk 100% of capital for 10% of return, for a 4% net interest margin. When you do something as riskier, banking is the riskiest business in the world.
Absolutely.
When you do something like that, you cannot think of national interest. Your first duty is to shareholders of your company. So you cannot take a call that I'm going to risk 100% of capital to earn a 3% net interest margin and I will not do diligence. See, HDFC Bank and ICICI Bank are two of the largest banks in the country. They also have the same priorities. They also want to lend to the largest groups. But why do they not lend to some while the public sector banks lend to them? So this will bring this whole credit quality question back into the fore once again, and I hope one of these assets don't go bad, because it will hurt the credit cycle big time, and the credit cycle has just started picking up over the last 3 to 4 quarters.
And once again,
Yes,
Siddharth,
please.
about SBI, LIC, the whole question
Yeah.
of the public sector once again coming back, and this looks like there will be a domino effect, because if this continues,
So
and
who
way
are the
we
ones
seeing-
who have bailed out the Adani issue?
But
Didn't those
that's precisely my question. Regardless of the sort of names that floated, we don't have that detail, so we will, at least there were market...
We'll find out, that will be public
we'll
knowledge
find out.
soon.
But the broader question is, we had big ticket investors, including royals from the UAE also putting in money. Look at the way the stock is cracking, the point that you made. Within 24 hours of that investment, valuation getting significantly knocked down?
And there's nothing more that an investor hates than having bought it and immediately seen a 20-25% markdown in his purchase price. This is the worst kind of thing which can happen. It used to happen to those public sector FPOs. I remember back in the day, the government would make a big song and dance and do an ONGC follow-on public offer. And 1 month after that, the stock would be down 20%. So a lot of foreign investors I know have sworn that they will not buy a public issue from the government stable ever in their lives, because they've been stung from ONGC to NTPC to LIC more recently. They've never made money on those companies. So please forgive us, we are not interested in doing that.
Once again, welcome to all India Today TV viewers who have tuned in to this special broadcast at Business Today TV.
I think we should recap what's going on for them, for the benefit of people who are joining in.
Yes.
Because they must have joined in thinking that we are discussing the budget, but I think we should tell them that the budget is quite history right now, because the stock market's priorities have moved on to something else altogether. If you've joined in late and you're watching something else, the Adani Group stocks have collapsed today. Many of them are circuit down. Adani Enterprises is down 25% and is taking down Indian financial stocks with them. Stocks like State Bank of India are down 10%, SBI Life is down some 8-9%, Punjab National Bank is down 7%, and the Nifty, which was up 250 or 300 points at one point, is actually down a couple of 100 points. There's been a complete U-turn in the market. Most of it can be ascribed to a huge drop in, or some adverse news which has come in on Credit Suisse refusing to accept Adani Group stocks as collateral and ascribing zero value to it, and that's led to a complete run on the Adani counters today. So that's pretty much what we are discussing now, and the other issue being that we've got a FOMC meeting coming up later this evening. European markets seem to be feeling the heat as well, and there is apprehension on what, even if the interest rate goes up by only 25 basis points, whether the Fed will reiterate once again that rates will remain high for long through the year and they will not come down in a hurry. So these are the kind of issues which are bothering the market at this point in time, and despite what seemed to be a fairly stable budget, the eye has been taken off the budget ball quite completely, which is why you're seeing all that red on the screen. So don't put it on the budget. It's not the FM's fault that the market is down so severely today. Some other issues have come to the fore, and that's rendered the budget quite meaningless from a stock market perspective.
Udayan, just to add to that, Adani stocks lower circuit, even with a 0.75% weight, and this is BT research that's coming in the Nifty, it's contributing to a negative 0.2% in the Nifty's decline, along with the same number for Adani ports. Basically, the Nifty is being weighed down by
the banks and the Adani. The Adani groups don't have so much weightage, so it's only 0.2%. But the big banks have a significant weightage on the index, and therefore they would be hurting. There are a few public sector stocks which have also fallen quite a bit. BPCL, for example, is down very sharply. It may be because there was no mention of that disinvestment plan at all. So I think now it's finally off for good, like people have forgotten about the disinvestment. So BPCL was another stock which I saw which was down very sharply this afternoon.
Udayan, we'll also get some market voices who are going to join in very briefly, but I come to you on because of the broader sort of audience that we have who's wanting to hear this from you. What do people do at this point of time? Last 2-3 years, massive number of fresh entrants into the stock markets. What does this episode mean for them?
Well, and also to add to what Siddharth is saying, Udayan, how long, I mean, given the fact that Hindenburg and Adani are sparring on allegations and counter allegations and, the kind of defense which they've been mounting, which doesn't seem to have held much water with Hindenburg. How long do you think, and now with credits, this latest development coming in, how long do you see this, kind of negative sentiment playing out?
It's difficult to say, Saurabh, because, its effects, it goes beyond the 10 or 20 stocks we are talking about. You will remember last year when that Jack Ma episode was playing out in China, it was such a negative event for China's impression for foreign investors that they started calling China a banana republic, which they didn't want to invest in. Now, I'm not saying this is the same episode, but it colors the view of a lot of global investors who are looking at India as a destination, and they become very, very leery about putting fresh money in. Already India is losing money to China this year because of valuation differences. Now, because of this episode, they're saying we want to be careful because India is, in the light of what has happened, looking like a classic emerging market destination and not that mighty India that we were talking about. So I think part of it is impression and sentiment as well, and not just the direct impact of what has happened with the Hindenburg episode. India's big problem over the last year has been consistent FII selling. They have sold many, many billions of dollars, and this is not going to help the cause of bringing that money back into the market. So we need now local investors to step up to the plate and support this market.
And this is not a market where local investors would have
so they are seeing all the circuit downs and then saying we should also wait now. So then who supports the market? That becomes the problem.
At this stage, let me welcome in Basant Maheshwari, investor and author, and Nipun Mehta, a market expert. Udayan, maybe you would like to take it forward from here with a question to both of them.
Basant, I don't know whether you ever bought a Adani stock or it belongs to your portfolio, but since all of them are circuit down, let me start with that. What would be the right way to approach those names in the light of what you're seeing, the carnage you're seeing?
I've been doing a lot of videos on the Adani stocks, and it's fairly evident that they are headed to the ground from the moon. And you can read between the lines, but stocks, it's a group that is leveraged. The bonds have just been marked to not fit for being lent against. So what do the lenders do? They come and secure the assets, or they write an email to the company, or how does it work? Because the moment they couldn't get the money for the FPO, and the way they got it, it was like asking friends and relatives, if I can use that word in whatever sense, to pour in the money for the FPO. It was like borrowing from the market for your child's wedding. It doesn't work. There are sinister signs in the way the stock has behaved, and it was fairly evident that there is no money in the company right now to repay the bonds. So my only fear with this stock in the group is, what are the resultant and collateral damage that it might create for our banks, at least on a sentiment basis? But life moves on.
Oh, I think life moves on, did he say?
Life moves on,
Life
yes.
has actually moved on the way down, because some of these stocks were frozen in circuit, they've come off circuit and they're going further down. So 25 is down to 29%, so life is actually moving in a very wrong direction. Sorry, you were going to ask somebody.
Nipun, that very same question to you, and how does one approach as a retail investor, if not a large institutional one who has a better understanding of such developments, how does one approach the markets now? We are counting down, less than 25 minutes left for market close on budget day.
Markets are in this kind of a situation, which is like a sharp falling knife. Most bold investors also try and stay away, and the general advice always is that don't try and put your hand below a falling knife. However, when I look at it from a pure valuation point, I think gradually with this kind of a fall, markets are becoming somewhat more attractive in comparison to when you looked at the kind of premium that was there in the Indian markets in comparison to a lot of the Southeast Asian markets or global markets. Probably that premium reduces. This kind of a fall is not necessarily, again, on the Adani Group, whether it has likely to have an impact on the banking sector and to what extent. Banks have come out saying it's likely to have limited impact or no impact. But really, given in light of whatever developments that have been there today or last couple of days, whether there actually has been an impact or no is something that will be important to know, because ultimately the banking sector is the one sector which has come out so clean after so many years of challenges, that one more sort of impact. Life will move on again for the banking sector, but it has a temporary impact when if there are bad assets that suddenly get created. But as far as most investors are concerned, I think they would wait for the markets to stabilize. And once you have that kind of a situation, and the fact that the macros haven't really got affected, a market fall is on the one side. But when you have a budget which is actually taken care of ensuring that the economy is on a strong platform, I think you're going to see gradually investors coming back.
Basant, quick one to you. Insurance products will be taxed. That's pretty much clear. The budget overall being very good, macro stability. So clearly, the pressure is now on banks. The point that you made, the point Udayan has been making, because of the exposure to one large conglomerate.
I mean, insurance products being taxed was a bad cat that just jumped out of the bag. We were just celebrating the relaxation in income tax limits, and suddenly we figured out that there is no relaxation per se if you look at it on a very broad scale. So let's keep it aside. That's not such a negative thing. We have learned to deal with more negative things from the budget. But what is emerging right now is about a group that is 2 lakh, 2.5 lakh, I don't know how much crores of money which they owe to banks both inside and outside. So once you mark a bond down, and Udayan knows it well. 2008, he was covering the entire global crisis round the clock 24/7. So it gives you that kind of a feel against one particular group. They need to get the cash out. They need to repay off the debt, or else all their good debts will be, I don't know what's going to happen. I don't want to use words right now, but it's really fearful.
It's not as simple, Siddharth. You know, you've been hearing very calming voices from the speakers saying life goes on and it's business as usual. Sometimes bad things start this way, and then the worm looks like the tail is twisting and it goes somewhere else. Most NPAs start like this, that you one default here, one default there, and before you know it, it balloons into a much bigger crisis. So I'm a little worried about where this story is heading. But I mean, on the subject of insurance, I mean, we should get all those stocks up on the screen. You know, from LIC to ICICI Pru to SBI Life, all down 10%. So that has been a brutal blow as well for the insurance sector at large. And this is a sector which is well owned by a large number of investors, from mutual funds to FIIs to local investors who thought that this was a good sunrise sector to be in. And I think it's been a very rude shock for them to be.
Before you focus back on the markets, and just to remind everyone, we are live on India Today and Business Today, covering the markets live till 3:30. Udayan, insurance products being taxed at a time when the GST on your annual premiums remains perhaps the highest in any developing economy. You're basically paying tax every year over and over again.
Yeah. And especially the insurance companies who have very large share of ULIPs, I think it's going to be a big impact on them, which is what the stock market is pricing in today. So, you know, overall at a macro headline level, this budget has been good. You know, the fiscal deficit target has been met, some capex has been made, capital gains has not been touched. But at the end of the day, I don't know whether people in the market will walk away feeling that it was a good day at work. I mean, despite a reasonable budget, I think the lingering feeling would be that we came away poorer today. Insurance got hammered, banks got hammered, Adani Group was into a complete carnage, and now we are entering the FOMC with a bit of red under the belt, where we could have entered the day 1,000 points higher on the Sensex. That never happened.
LIC down about over 8% to then.
Basant, and I'll take that question to Nipun as well, with questions from Udayan and Saurav. Is there something that the group, the Adani Group, needs to do? As a market guru, I'm asking you this, to reassure people, or do you think it's not going to make a difference?
Siddharth, one thing when I say life moves on, I said with regard to stocks that are not connected to Adani. So what they need to do right now, not that they need my advice and not that I'm actually capable of giving any advice, is to do a fire sale and hold the debt to some level. They have to do a fire sale, things that can be sold, there are people, they can do it, or they can arrange for the money. So it's really an uncalled for advice from my perspective. But if they can't stop it here, it can only get worse. That's my fear.
Nipun, that very same question to you, Nipun Mehta.
So clearly, it's not that these kind of situations haven't arisen in the past. This time, the difference obviously is the size and scale of the entire issue that is there with the group is obviously far beyond. End of the day, it was the second largest market cap group in the country, and that's really brought down stock markets to its knees to an extent. So yeah, on the one side, yes, ensuring we are probably beyond talking about corporate governance, talking about being transparent and stuff like that. I think it's time the group actually, yes, to an extent, repays some of its debts. Some of its debt comes out cleaner as far as a lot of the broad holdings are concerned. And I think that kind of transparency will create a bit of confidence. I think it's important that the fall that we have seen, the constant fall that we've seen, gets sort of restricted once now that the IPO is over, now that a lot of that extent of uncertainty is over. And despite that, if we've seen this kind of a fall, after that we've seen this kind of a fall, I think it's important that we see more proactive action being taken by the group. And it's like yesterday and not tomorrow.
Udayan, just one point, and I don't know if it's a rhetorical question which is not relevant at this stage. Early on, when the FPO opened, one of the questions, and we discussed it, was the group lowering the price, considering what was happening. They didn't do that. Family and friends came out, and they have taken.
I wish I had such family and friends who could quickly give me $2 billion.
But that number, that number is larger. But earlier today, $75 billion of market cap, it must now be 80 billion plus, perhaps, to raise $2.5 billion. Was it an error, or it doesn't make a difference as far as the markets are concerned?
I think the public issue is a sideshow. The bigger issue is what is going on with the allegations, what has been said in defense by the company, and the fact that after all the defense has come out, all these stocks are 30% lower or 20% lower than where we were at the start of it. So this is a signal that the defense has not been bought by investors or the market, that they have heard the company out and they're still selling the stock down, which is always a very, very damaging position to be in. Too much focus was on that FPO. Companies of that size and industrialists of that size can always conjure up a couple of $1 billion and salvage it. I mean, look at what the government of India does. You put an issue on the block, it doesn't work out, you call the LIC and ask them to subscribe. It has been done for ages, years and decades down the line. So I was never any doubt that the issue would go through, but that's completely a sideshow. Now the question is, what happens from here on? Where do these
margin pressures now come into play, Udayan?
The only thing which I would say is it's not a very widely owned group, because the float is very small. A lot of people in the market do not own the stock. It's a very narrow float, which now will increase with the public issue. And therefore, I don't know what the mechanism of the margin call situation or the fresh shorting in the future segment, what kind of pressures that would lead. But I think it's an open invitation for people who can see the price on the screen and they know which way the story is headed, and therefore it will be a stock which will be very difficult to defend by the bulls or even the supporters of the stock, whoever they may be. It will be very difficult.
Well, then I have I wanted to ask you, what does, last year when the Adani pack was shooting up and they could do no wrong and it was just up and unidirectional, and now it's the other way around. What does it mean? What does it show for the markets? I mean, what does it reflect in terms of Indian markets?
Not just Indian markets, I would say that people keep saying the market is always right. And I've never understood the wisdom of that statement, because the markets make mistakes every day. I mean, the markets make the biggest error in my life in 2007 and 2008, which is why in a week 50% of the value was gone. Was that the market behaving correctly? So the markets make mistakes all the time. It's for investors, like Vasant was saying, that the thing to see is how many mutual funds or how many investors who are pedigreed and you respect have these stocks in their portfolio. They give you different reasons, that the float is not large enough, something is not, which is why it is not included. Otherwise, how could any pedigreed investor defend the fact that they don't own a stock which is the biggest wealth creator of the previous year? But they say no, we are happy with not owning it. That should have been the first warning signal to investors, saying that every mom and pop is talking about this group. But why is HDFC mutual fund not owning it? Why is ICICI Prudential mutual fund in most schemes does not have it? Something is missing. So I think the alarm bells should have been ringing then that it was not owned by the investors that you track and follow. And now we know the reason why things are coming apart.
One quick question to Basant. This episode, will it force foreign investors to take a relook at their India strategy? They've been selling, but on a broader perspective, given what valuations were till a few days back, Basant?
I think the India selling is more a function of the Fed raising rates. If the Fed cuts rates later during the year or whenever, I think that's going to change. And one company doesn't make a country. I think we will get over it. But the problem is the process and the way we get over it, the damage it does to our psyche, our thought. But I think 2 years from now, 1 year from now, this will be a non-event. Like Lehman was a non-event in 2010. That's how the world moves on. But for the moment, this is the biggest event.
I agree with that this is the biggest event. And I remember, it's not the 2008 crisis which comes to mind, Siddharth. What comes to mind is the Satyam controversy, because on that day, that one stock, and was not even as influential as Adani, it's just one technology company, it just brought the market down on its knees. And I saw how stocks were falling, and that day I wonder what these are doing. On that day, it was clear on the screen that the stocks which were doing well, only stocks, were companies like HDFC, Infosys, where the market was saying, we trust these companies' balance sheets. And I won't name names, but there were many other companies which had nothing to do with Satyam, which were down 5-7% that day. But that episode actually colored the view on India for a long time, because people started to say, are we sure that we want to get into these kind of companies?
Do you see signs of that happening this time around?
No, because I think we have come a long way, and there is far greater trust about Indian balance sheets and Indian corporate governance now than it was the case then. So I don't think people believe that the rest of India has much to do with the kind of situation that we are seeing with this group. But having said that, you and I sit in this country and we are far more aware of what's happening on the ground. Imagine some guy who's sitting in Boston and who's got a small shareholding in India suddenly being told that the third richest man in the world just became the 50th richest man and is on his way down out of the top 100 because of what's going on there. And that, for him, India is just one more market, and he begins to wonder whether he should be putting more money to work in this kind of a market. So I'm not making this a bigger issue. I'm just saying that for us, India is everything. But for a lot of investors, India is not the only game in town. So it can shake their confidence.
And therefore, when it comes to confidence, we were talking about earlier episodes, Udayan, the nature of the market has changed in some ways. Like you said, while technology and other elements are settlement times, all of that is a great deal of improvement. The number of retail investors, and I keep coming back to that theme, and the one lesson that the markets teach us, it's the little guy who gets seriously hurt.
Yeah, the only thing, you're right, they are left holding the baby, and there was a lot of talk over the last 1 year that foreigners are making a mistake selling India and the local guys are being wise by buying India. And to that, the only question is time will tell. The only thing to tell the small investor now, having come in over the last 2 or 3 years, is basically the only question is of a time horizon. If you are saying, I need to make returns in the next 1 year, God help you, because that's not a given. Last year, very few retail investors made money, last 12 months. The market was up 4%, most portfolios were actually in the red, so they haven't made money. Now the way this year has started, with India down some 5-6% and most portfolios down 10% in January or more, the question to ask is, what is your holding power? That is what saves you at the end of the day. As Basant said correctly, 2 years down the line, this episode will only be a memory. If India is doing well, you will get your returns from the stock market. But the narrower you make your time horizon, the riskier it becomes, and you may burn your fingers very easily by selling at a loss.
Yeah, go ahead.
Sorry. The other question to discuss, Udayan, is what does the Adani Group do to stem this? What is the strategy? Does it continue to sort of have this confrontationist attitude on the allegations, or what are the options you think?
will out, as they say, sort of. If they have done no wrong and if their debt is not a problem, then Hindenburg will get crushed. What you say in defense is of no consequence. There is no way you can talk your way out of a situation.
That's right.
Nor Hindenburg nor Adani can do it. If they are on a solid wicket, then they will trump. No amount of defense or PR will get us over this crisis. So we will know in the next few days what happens.
Let's bring up Adani Enterprises back up.
32%, I think.
Yeah, and that's just a few minutes left.
1/3 of its market
and it's
cap
cracked
now.
below. It's just cracked below 2,000 as a sort of cycle. And look at those numbers.
34% down.
34% down. And let's run through the Adani pack if we can quickly. Udayan,
you know, even if you don't own the stock, you feel unnerved by a fall like this. Many people don't own Adani, but when they look at something falling 33%, it instills fear in them that something has gone wrong. So there is a knock-on effect on sentiment.
It's a sentiment thing,
which is much
absolutely.
more than even ownership of the stock.
Nipun, quick point on what we were just discussing. This year, from a returns perspective, regardless of what is happening right now, what do you sense is likely to happen?
Well, clearly a lot of uncertainty. We've already spoken of a lot of volatility during the entire year. Just to add one point on the earlier discussion on Adani, I think the objective of the IPO was, or FPO, was probably to diversify the shareholding, to give a lot of shareholding to the retail shareholders. On the contrary, at the end of the issue, you had exactly the opposite. You actually didn't have retail investors. It never got diversified, and you are actually back to having a concentrated holding in very few hands. So the clear objective of spreading it wide has not been achieved, and that's a big negative, as I would see it, as far as not just the stock is concerned, but overall group strategy that they wanted to actually implement. Yeah. But when you look at the year, I think it's probably more likely to be shifting to a year of, in terms of safety, you might see investors looking at fixed income as an option. A lot has been spoken about asset allocation. Probably it will be a time when people start looking at asset allocation, looking at fixed income, looking at a possibility that probably a 8-9% return, depending on which instrument you're talking about within debt. Beside fixed deposits, is that a better option, or what, given this kind of volatility, given this kind of a fall this sharp fall that you see in select stocks? So yes, I think it will be a year of a lot of introspection. You might see probably, with a kind of fall today, maybe a good lot of SIPs getting discontinued. So I think it'll do a lot of change of thinking as far as retail investors is concerned. Probably mutual fund managers would need to relook at their strategy if there is lower monthly inflows that are coming by.
Okay.
The positive that I see, of course, is that with that insurance change, you might see a lot of those flows which were going into insurance.
That's exactly what the AMFI chief told us. Udayan, the return of the good old fixed deposit, as we
very attractive now, Siddharth. Very attractive now in the light of no risk, 7.5% in many cases. It's nothing wrong with that. You know, you sleep well at night. You're not worried about what's going on with Adani, with FOMC, etc. This is not a bad time for fixed income.
Can I ask you a question? What would an ideal portfolio look like at this point of time, at least headed into the next few months?
See, portfolio construction with next few months is too tactical for most people. Things keep changing all the time, and it's not advisable. But if you were to ask me what happens in the next 1 year, I would say fixed income has as good a chance of performing well with minimum volatility or no volatility compared to equities. That doesn't mean equity may not turn in a good October to December and still give you some returns, but I think it will come with a lot of volatility this year. You probably are better off taking the fixed deposit option. But for a lot of people, keep your long-term SIPs. Nothing. India has not collapsed. The world has not come to an end. You're still today at 17,500, which is less than 10% away from an all-time high. This is not a level to panic. This is not 2008 by a long shot. So I don't think any major panic has happened. But I wanted to ask, I know this is a different kind of forum, I wanted to ask a professional investor whether they believe that some companies of Adani are better than others, and therefore today's fall affords an opportunity to pick up some of those assets, because
perhaps Basant can...
no, because Adani Transmission has cut all its losses. It's come back almost, it was flat.
Yes.
So, maybe everything is not the same Adani, and companies with good assets are looked at differently.
And the good news then is that the Sensex, the broader market, is still in the green.
Yeah, Sensex, but Nifty is not. Nifty is down 40.
But Basant, look at the turnaround in Adani Transmission.
If you heard Udayan's question, Basant, could you comment?
So, Siddharth, if you tell me, I don't have the money to buy a majority asset, but I wouldn't buy a minority asset, which means I don't want to buy a few thousand, a few lakh shares out of any of these companies. I don't know what's in store for them. But if I get an asset sale, which is like Adani Port, it's a world-class port, super execution capabilities, or an Ambuja Cement, if someone wants to buy that, he would want to buy 51%, not less. Because as a minority shareholder, you don't have control, you just have ownership. And no one wants ownership without control into a group, which you don't know what's happening. And the market has recovered, which means we are saying, okay, Adani, you are on your way, we are on our way.
Adani is on our way, we are on our way. Last 30, 40...
this market recovery in the last hour also has, on budget day, also has some optics. Every FM wants to see the market ending well, and unless it's a disastrous budget which cannot be defended by any government, which it is not today, there is a little bit of fag end buying from some of the domestic institutions. It's been a time-honored tradition. And the three-letter word in the market who does all these operations, any case, whose stock is down 8%, by the way, I'm not mentioning it. But, they come into play at this point in time too. So it's ending like with the Sensex Nifty down 60 points. I feel bad for Nirmala Sitharaman. She didn't do a bad budget, all said and done. Sure, it's not a massive consumption boost or a huge thing for middle-class taxpayers. Now we know that. Sure, maybe the capex boost is not as much as the 10 lakh headline figure, 10 lakh crore headline figure means. But I think it's a reasonable budget and which does not deserve punishment from the market. And she would have been perfectly in her place to expect a nice 300-400 point rally in the Sensex at least, and the next morning's paper writing salutary things about it. Instead, I think tomorrow's headlines are all starting with A.
Well, they could take satisfaction from the fact that there was a 1200 point or more salami that was given.
What it could have been.
But clearly, the Adani news weighing on the markets, a sea of red in several Adani stocks, and that
ocean of red.
An ocean of red, as Udayan puts it. I'm going to thank all my guests here, Basant, Nipun, Mr. Gopalan, as we close on this episode of our coverage with the markets closing on Nirmala Sitharaman's fifth budget, this government's final in the present term. If you've been watching, thank you very much. Thank you, Udayan. Thank you, Saurabh. Time for a short break. We'll be back with more. Do stay tuned in.
The only budget coverage worth your time. Blazing fast, actionable budget analysis. Budget intelligence that will dominate. Nirmala speaks, we decode in real time.